credibility to the company's mission and increases the odds of scientific success. But as with all early-stage biotech firms, there's a catch. ATNF is burning through cash at a rapid pace. Developing new drugs is incredibly expensive, with costs piling up from lab work, clinical trials, and regulatory filings. The company's financial statements show high expenses and negative cash flow, which is typical for this stage but still a major risk. To keep the lights on and fund ongoing trials, ATNF will almost certainly need to raise more money. That usually means issuing new shares, which dilutes existing shareholders and can put downward pressure on the stock price. It's a common story in biotech, but one that investors need to watch closely. The company's future, and its stock price, hinges almost entirely on the outcome of its clinical trials. If the data is positive, the stock could skyrocket overnight. But if the trials fail, the company could lose most of its value in an instant. This kind of volatility is not for the faint of heart. Investing in ATNF is less like buying into a stable business, and more like placing a high-stakes bet on a scientific outcome. It's a binary gamble, success or failure with little in between. The risks are enormous, and the rewards, while potentially huge, are far from guaranteed. Unless you have a deep understanding of the underlying science, the clinical trial process, and the specific risks involved, buying this stock is more like purchasing a lottery ticket than making a traditional investment. For most people, it's not a core holding but a speculative flyer at best. For the average investor, the wisest move is to watch from the sidelines, wait for more clarity from clinical trial data before making any big decisions. In biotech, patience and caution are often your best friends. Now let's shift gears and take a look at the world of crypto mining. BitOrigin Limited, BTOG, is a micro-cap company mining Bitcoin. The idea profit from crypto without buying coins directly. But mining is brutally competitive, capital-intensive, and dependent on cheap electricity. BTOG is tiny compared to industry leaders with no clear edge, just more risk. Their financials show losses, and the stock is extremely volatile. Operational risks, regulatory threats, and constant dilution make this a dangerous bet. If you want Bitcoin exposure, just buy Bitcoin. Don't add layers of risk with a small miner. For most investors, BTOG is a strong avoid. Let's move to a crypto project with a real-world use case. Assemble Protocol ASM wants to unify all your loyalty points, airlines, coffee shops, credit cards on one blockchain platform. You'd convert points to ASM tokens and spend them like cash or trade them for other crypto. The loyalty market is huge but fragmented, and Assemble's solution could unlock a lot of value. For businesses, it's a way to offload loyalty liabilities and attract new customers. The challenge? Getting big brands to join and making the platform easy for everyday users. Competition is fierce and adoption is